What's good, guys? Welcome back to another video. In this one, I'm going to give you a long-term kind of like outlook for Bitcoin, just on where we're at in terms of the bigger picture. But I'm also going to get into the intraday setup. And speaking about intraday setup, the one from yesterday ended up being a bit of a no trade, although we were overall correct in terms of the overall movement. Just to give you an idea of what I'm talking about. Yesterday, we mentioned that either one of these levels were going to be possible. You just needed to look for a M5 change state of delivery. Unfortunately, on this initial one, we didn't quite get it. And on this second one, by the time it hit, it was already like 11:30 New York, which was outside of our trading window. And usually I don't take trades outside of any kill zones, especially when there aren't news. And so even though the overall direction was correct, like we did end up actually taking a trade from it. And so right now we're still sitting at 128 wins under the last 164 trades called. And anyways, time to get into the long-term outlook for Bitcoin. So just to break down a couple of things, first of all, we're going to take a look at this weekly fair gap right here. And by the way, this long-term outlook was requested by a member inside the VIP. If you would like the opportunity to just ask your questions directly and get answers directly, feel free to sign up to the masterclass and sign up to VIP. It's going to cost you less than a Signals group, and it's going to get you way more results than a Signals group ever could. Like most of the members inside VIP have already made back their investment with it just a couple of weeks. But anyways, let's get into this fair gap right here. This is where we're at the moment. If you guys recall from a few weeks ago, actually even a couple months ago, I did mention already that in the event that we get back into this fair gap, this would be the kind of support zone that I will be looking for. It doesn't mean that I'm just going to place a long here and just hope for the best. Ultimately, there is the difference between my opinion, which is I think that the market's going to bounce from here. I also do think that based on past data and based on how the system works, which is a pretty fine win rate system, that this is a reasonable area where we could find a bottom. Just to give you some examples of what I'm talking about, this previously was a weekly gap. This was also a bottom that I called live here on YouTube. For those of you who were following me a few months ago, you will recall that I was telling all of you guys that if you are swing traders, buy into Bitcoin at that spot because, well, ultimately it's going to pump, and kaboom. It did. And right here, this bottom also came at a weekly fair gap. And this bottom here came at a weekly fair gap. This bottom here came at a weekly fair gap. So ultimately, based on the behavior of this current bull run so far, throughout this entire bull run has been forming at weekly fair gaps. So right now, just because we're here means that there is a higher likelihood that we are going to find a bottom here and we are going to bounce up from here. But it is still too early for us to just execute right here, right now. Now, the second thing to consider is the overall market structure. Now, one of the concerns that some of you may have, and this was brought up earlier during a bootcamp Q&A call, which was, yeah, in the event that you come back up into this order block right here, wouldn't that just become resistance for price to ultimately just, yeah, like the bull run's over and price in a dump from this point onwards? The answer that I have to that is that you need to consider the overall market structure. If I just draw out market structure as all, right, you can see that we are still very much with a bullish structure. Until this low is broken, you are overall in bullish market structure. And when you are in bullish market structure, guess what happens? Bearish order blocks and bearish resistance levels can just get completely destroyed, right? It gets blown through. Like here's another order block, right? Boop, boop. It just completely kind of disregards it. And so while you are still in bullish market structure, we continue to trade with the trend. And just to kind of illustrate an example, I don't know how many of you watching this have been in this bull market since like 2024 or like even 2023. But if you recall, back then, the sentiment when we started hitting 69,000 or 70,000 and people were saying, oh yeah, this behavior is not like the bull run. You know, you hit a new all-time high before the halving, blah, 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 blah. This is the top. All right, sure, mate. Yeah, you may be right, but you ultimately missed out on a further $50,000 worth of movement. Same thing here, when we hit 100K, everyone was calling that, oh yeah, this is the top, you know, distribution, whatever. Yeah, sure, maybe you were right for a few weeks, but you also ended up missing out on another $20,000 to $30,000 worth of movement. And the point that I'm trying to make here is that there is a very big difference between what we think. Like you may think that this is a pop. I don't like at the end of the day, right? There's a difference between what is our opinion and what the market's actually showing us. At the end of the day, if you want to make money, you trade what the market's showing you. And at least so far, this structure is still bullish for the most part. Like in terms of every high time frame metric, you are still pretty bullish. And the only way this changes is if this swing low gets broken. And I understand that $75,000, which is the swing low, is quite a ways away, but that's also the way that higher average structure works. So yeah, like in terms of market structure, we're still really bullish. And based on my kind of past data, I would say that the likelihood that we bounce from this point onwards is higher than the likelihood of us just completely dumping. Now, again, this is likelihood. This is something that has been kind of right about 4 out of 5 times throughout this bull run. right? Taking a look at this early gap. So that was one instance, that was two instances, that was three instances, four instances. So yeah, for the past four instances, this has been pretty right so far. Versus if you think that this is the top, right? If you think this is the top or whatever, and price is going to, down, the ball runs over, whatever. But so far, you'll be right a grand total of about 0 times because, well, price continued to make new highs. So I'm not saying that this is guaranteed to, be the bottom and, things are going to go up from here, because ultimately, if there's one thing certain about the financial markets is that nothing is ever certain. But at least based on the probabilities, as well as what we have been able to observe from this ball run so far, this is a decision that ultimately could be odds in our favor. And when it comes to trading, if you understand anything about trading, it's not about, single trade bases. It's not about your performance over the course of like a single trade. It's more about, it's making sure that you make more money than you lose over the long run. And it's so far, so what we've been able to observe throughout this bull market, this has been a higher probability outcome than a lower probability outcome. And so I like my odds on this. Now, again, just because you kind of entered this level that I've been predicting over the last couple of months does not mean that I immediately buy into this, because you still need to wait for the market to give you some sort of confirmation, because so far this is still looking pretty bearish. And the way that confirmation is going to come is if we get a bullish weekly close this week, then at the very least we can start looking for longs next week. But definitely right now, try not to place a limit order just yet. Like, you can do it, feel free to do it. I'm not going to stop you, but I'm just sharing what's worked for me. And the reason why I talk about this is because, like, there's been quite a few instances where, for example, let's say you think that this fair value gap is the bottom, or like this fair value gap is supposed to be the bottom or whatever. You place a limit and boom, you get stopped out before the move continues. Same thing in, let's say, this whole block right here. Maybe you thought this was going to be strong support. Price breaks through. Like just a few weeks ago, a lot of people were saying, oh yeah, 105,000 was strong support, or 100,000 was strong support. Yeah, guess what? You're 10K below that point right now. So there's a very big difference again. So like setting a limit based on where you think the market should bottom is like 1 out of every 10 times if you get it right, or 1 out of 5 times. But again, it's about the odds and the probabilities over the long run. It's not based on single trade bases. Like, you want to just overall make the objectively correct decision or the objectively better decision. And that involves jumping into the markets with a systematic plan. And setting a limit based on what you think it should be the bottom is not a systematic plan. It's just you trading what you think. Hopefully that kind of gives you a overall idea of what I'm looking for in terms of the high time frame. It feels really bearish right now. The fear and greed index, you are very much into the fear at the moment. But just understand that that's also okay, right? Everything is temporary and doesn't mean that it all runs over, at least based on market structure and everything. And we're still going to be looking for longs, but not quite yet. So anyways, just to remove all of this stuff right here, let's start off with a clean slate and let's start heavy into the intraday trade of the day. Now, yesterday's candle closed bullish, right? Which means technically we're supposed to be looking for longs. And if I zoom down into the lower time frame, I can see that there is now a bullish change in state of delivery, right? This is not highest probability signal because overall have still been placing in really bearish workflow. In fact, I'm sure there were instances in the past to fall, like, in fact, not so long ago, on the 11th of November, you got a bullish change in state of delivery, but then you still came into a bearish order block and you dumped. And if you take a look at even here, you came into a bullish change in state of delivery here, and then you still didn't break above this bearish order block and you eventually dumped. So let's see if this is going to be different. On this one, you have a string in state of delivery, but the next point of resistance is going to be over here. And price hasn't quite tapped into that area yet, if I'm not mistaken, at least on the divider chart. But based on this, like, I'd say this is looking like a better kind of like long setup as compared to the past couple of examples. And ultimately, even though the market is bearish, but just because of the bullish 80 candle close, as well as the behavior that we've been able to observe on the hourly chart, I'd say at the end of the day, we need to trade what the system's telling us and not what we think. And even though this may feel bearish, we learn to trust the system. And this has been proven time and time again. For those of you who have been watching my videos over the last 300 days or so, you will have noticed that there were many instances where I was feeling bearish, but just because the system was pointing towards the bullish direction, I called a bullish trade, and eventually that ended up being the right decision. I'm not saying that this is guaranteed to be successful. I'm just saying, like, we're choosing to follow the system over, what may be our own opinion. So that's just the way that I'm approaching this at the moment. But I'm not going to disregard the fact that not only, like, after this bullish change in state delivery, technically you also have the bearish change in state delivery over here. But what is positive for me, at the very least, is the fact that this is a fair value gap that has been respected so far. So in the event that, basically, as long as you don't break below this level, you're going to be good. And the timing that you're going to want to look for this level to not get broken below basically is between the hours of 7 a.m. to 10 a.m. But there's a little bit more nuance to this, because today you're about to get news at 10:30 a.m. as well as 2 p.m. At 2 p.m. you can get FOMC. If you know anything about, just the financial markets, you know that this is a very high impact piece of news. And usually it happens during a day. FOMC is that you may get an extended accumulation, in the sense that not much could happen between now until the end of the New York morning. Now, usually we would trade during the New York kill zone between the hours of 7 a.m. to 10 a.m. But on the day where we're at late news, the true movement and the biggest moves of the day could happen a little bit later, closer to 12 p.m., 1 p.m., or even 2 p.m., which is the hour before news to the hour after news. Let's keep that in mind as we head into today, that potentially the trade for today could happen a little bit later than usual. But otherwise, let's start getting into the lower time frame now, just to observe if there is a potential long setup. And so far, the fact that we have swept below the Asia lows give me a little bit more hope, because usually the Asia low acts as kind of like a manipulation, right? London is the session of manipulation. If you get manipulation below the Asia lows with big daily bias towards the upside, this is a really positive signal, because eventually you may get distribution during the New York morning as you head into the afternoon. So far, this is looking pretty positive. I suppose already, in terms of 5-minute chart, you're already putting in pretty bullish order flow. So overall, you're just going to be looking for longs, especially if by the time you watch this video, price is making high highs and high lows. Then yeah, just continue to momentum trade this higher. If by the time that you watch this video, let's say during the New York morning hours, price is putting in bearish order flows as a factor in it, then that's going to be a bit of a red flag, because it means that this bearish edge set delivery on the 1 hourly time frame may be the one that's being inspected instead. And if you get that happening, it means that this order block is going to be a bearish order block and price is going to start going lower. Now, am I going to take a short trade if that happens? Potentially. I'm going to update you guys on X. Speaking about X, I actually wanted to post some trade updates yesterday, but as you know, cloud flag went down. And as much as I tried, I just could not, well, first of all, I could not load Twitter. It just wasn't working. And secondly, when I tried to post, it just wasn't allowing you to. So I do apologize if you guys were looking forward to an update. Twitter was just straight up not loading yesterday, but I did post some updates to the VIP group. So yeah, I guess if you want direct access to me, feel free to check out VIP, but no pressure on that. So yeah, the overall bias in terms of the system today is still going to be pretty bullish, but I wouldn't be surprised if I end up changing my bias later on. I just got to react in real time to the market conditions. And that's a skill that you kind of need to be a good trader, right? Just the ability to react to ever-changing market conditions, because it's always going to be evolving and changing. Now today, unfortunately, the bias versus the 1 hourly order flow is a little bit different. So you just got to play it smart, got to play it safe. But overall, I see a world where you can go long. I see a world where you can go short. Unfortunately, the best solution is, I'm just going to ask you to, watch what I post on X. There are many days, in fact, where the bias is really clear. Everything is just really clear and just okay, that's just short. Or okay, guys, just go long. Today's not one of those days. And this was reflected in the past week where I think basically won 4 trades in a row. And those 4 days were super straightforward, guys, just short and you're going to be good. Yeah, I wish I could have given you a better call, but I hope that I've at least prepared you for just kind of the scenarios that are possible for today. But otherwise, the core trading periods that I'm going to be looking at personally is going to be between the hours of 9 a.m. to 11 a.m. because we have a piece of news at 10:30 a.m. means 9:30 you may potentially get a setup. Again, I'll keep you guys posted on X. Feel free to follow me there. And then in about 10 days, I'm going to be hosting a live masterclass breaking down this exact system that's gotten me an 80% win rate over the last 300 days live. If you want to sign up, click the link below. But otherwise, see you in the next one. Ciao, ciao.